Good morning. This is Josh Hayes with Hedge Plus, and here is the market monitor for Tuesday, September 23rd. Well, we have had crop ratings declining for a sustained period of time now, well over a month, and I think that was part of the reason we started to see funds liquidating their shorts. I think at this point it's definitely pretty much fully expected that yields are going to continue to decline and to be adjusted downward. And it was probably time to start factoring that in, even in spite of coming up on harvest and harvest pressure. But since the end of last week, we've been in somewhat of a tailspin with these markets. A couple of things have happened that have really changed the picture. I'm a little baffled at what people were expecting from Friday with Trump's call with Xi. Going into the meeting, it was pretty well established that a deal wasn't going to be finalized over the phone. There should have been no expectation that some major commitment for soybeans would be announced immediately after. Trump had two objectives that he wanted to get the right answers on, one having to do with Boeing, airplane manufacturer, and the other one being soybeans. And if he liked what he heard from Xi, they would go ahead and schedule their in-person meeting, which they did. Nonetheless, the lack of specifics, the lack of mention of agricultural products on Friday following the meeting really let a lot of people down who were expecting something along those lines. And that began a downturn that has continued ever since, and it continues right here up to this moment in the overnight trade. What struck yesterday was something certainly no one was talking about, didn't see coming. Argentina's economy is in really bad shape. They're talking bailouts. They're talking assistance from the United States. They need cash flow now. And so they suspended their export tax on all of their agricultural products. And what that's going to lead to is a lot of farmers selling there. Farmers had been holding on to crop. Their price had remained elevated over ours. And now suddenly you're going to have a lot of crop come to the market out of Argentina. And that added another layer of price pressure. Not necessarily something you'd say would just absolutely start a spiral, but what it did was we've been trading in such narrow ranges, resistance at the bottom having not been broken for quite some time, and of course, support, and then resistance at the top of the market. Just trading in that tight range, and what we finally saw with this, I guess, straw that broke the camel's back, that support at the bottom was broken, and there's just nowhere for especially soybeans and wheat to go other than dramatically down. I think the only thing that's really keeping us afloat right now are the fact that we've got lower crop ratings and then we've had strong exports. But those strong exports are for corn and wheat. With corn inspections displayed yesterday, we're up 59% over a year ago. We're beating a very aggressive USDA forecast by 5%. With wheat, we're up 13% versus last year and beating the USDA forecast by 9%. But with soybeans, we are lagging, and that's where we really do need that deal with China. We're not lagging by as much as many would have expected. We're down about 10% versus the USDA forecast, but actually up, granted, very early in the marketing year, but up 26% from a year ago. The assumption is that that's going to continue to further away and that we're going to fall way behind by the time we actually get a deal with China. The problem with lack of forward progress on a deal with China on Friday is it really pushes the timeline to a point where it really narrows our window. If we can't get anything done with China until the end of this year, we're already talking, end of the first month of next year, late January, early February, and South America's beans are being harvested. So we've got to get some sales done here in a shrinking window, and that has people very nervous. So you've got Argentina for the next 6 weeks. You're going to be able to sell in mass, probably end up with the lowest price across the board. You've got support broken, and that what that did was it invited in a whole new round of speculative and technical traders. So, like I said, we had a situation where the funds appeared to be starting to cover their shorts, and at around the same time last year, they just gradually cover them all the way through to the end of the year and into the following year. Instead, now we've got new speculative trade and technical traders jumping on this broken support. So there's one positive and one positive alone. Instead of trading in this very narrow range where any position you get in the market, it's just constantly, up and down. You're really going nowhere. This is setting up a scenario where we can get very clear direction. When we bottom out, we've got a great buyback opportunity that probably wouldn't have happened without some of these latest developments. So the one that has been holding somewhat firm has been corn, still holding above 420. And I think that's entirely due to the great export sales we've got, the lack of worry that those are going to disappear anytime soon. The exports should maintain. Wheat, there's a little bit more concern about demand, not really any concern about demand for corn. And then the other factor for corn is obviously the shrinking crop. So corn might be able to keep a footing here around 520, but if soybeans and wheat obviously continue to drop the way they have the last 3 days, then it's going to be really tough for corn to hang in there. But at least corn has some fundamentals in its favor. Taking a look at the weather, rain's coming for the Midwest and the East. A little too late now to do anything to help the crop too much, but it will slow harvest. Elsewhere around the world, nothing continues to be nothing of real big concern. Argentina and Brazil are both getting just the right mix of rain, and then obviously periods of dry weather that help them with planting. Their soil moisture is good. Sufficient rain is just about exactly what you want at this time as you plant. You don't want too much, but you also want to have the ability to get out there and get the seed in the ground. Argentina's going to have a fairly dry week. They'll be out getting the planting done, and then they'll have a round of rain for the weekend. So pretty ideal there. And Russia did get some recent rain in certain areas to the south, but it's most areas are still too dry. Again, not really any major weather concern. The biggest weather issue that we've had in around the world recently is our own, with that extended period of dry weather that will definitely impact yields and lower our numbers in the long run. That will be somewhat helpful for prices, but it's obviously not very helpful to those who are suffering the consequences in their fields. Taking a look at overnight prices, we continue to go down. As I said, it looks like corn is doing everything it can to keep its head above 420. But beans continue to dive down overnight, all the way down to 10.06, and wheat down another penny and a half to 5.09. To take a look at where these prices are in relation to last week on Thursday morning before this market started to dive, corn is only down about 5 cents since Thursday morning, whereas soybeans are down 33 cents and wheat is down 21 cents. Again, the only positive potential here, only potential good thing to come from this is it's setting up some much clearer buyback opportunities. And I would imagine we are getting really close to that with soybeans. So stay tuned for a fixed risk hedge recommendation, perhaps, for those in that program. And also, I'm sure you'll be hearing from Patrick soon with regard to Complete. That's all for today. Everyone have a great day. Good luck with harvest and stay safe.